This news, the Nigerian National Petroleum Company Limited says it has supplied more than 80 million barrels of crude oil to the Dangote refinery since the commencement of operations in 2023. According to the spokesperson of the NNPCL, Mr. Femi Shoneye, this was executed through the Naira-Crude contract. In a statement made available on Monday, Mr. Shoneye punctured the alleged unilateral termination of the crude oil sales agreement in Naira between NNPC and the Dangote refinery. He explained that the contract for the sales of crude oil in Naira was a 6-month agreement, subject to availability, and is set to expire at the end of March 2025. Addressing that discussions are currently underway to establish a new contract. Mr. Shoneye reaffirms NNPC's commitment to supplying crude oil for local refining based on mutual agreement, agreed terms and conditions. Meanwhile, the chairman technical subcommittee for the Naira-based crude supply agreement, Mr. Zach Adedeji, in another statement says their attention has been drawn to reports suggesting that the Naira-based crude oil supply arrangements with local refineries has been discontinued, forcing them to rely solely on international crude purchases. Mr. Adedeji says these reports do not reflect the realities of the ongoing work under the Federal Executive Council initiative on domestic sales of crude oil and refined products in Naira. He explained that the policy framework enabling the sale of crude oil in Naira for domestic refining remains in force. He added that the initiative was designed to ensure supply stability and optimizing the utilization of local refining capacity. And in other news, Chatham House, a United Kingdom international affairs policy think tank, says Nigeria's economy is witnessing its most competitive season in 25 years. They say it's coming on the back of President Bola Tinubu's administration's economic reforms, including the devaluation of the Naira from 460 Naira to about 1,500 Naira to $1. The organization said Nigeria's currency adjustment is one of the largest anywhere for years and is now more competitive in the past 25 years. The Royal Institute stated that President Tinubu's economic reforms gave Nigeria the best hope for sustainable growth for decades, disclosing that the part of the reform process took remains crucial for the country's future. According to the organization, the Central Bank of Nigeria had added to its foreign exchange reserves, which had exceeded $40 billion, as well as having an adequate stock of reserves, the requirements for financial stability in developing countries. The think tank Royal Institute stressed that controlling inflation remains a pressing challenge for policymakers, especially since the urban poor are hit hardest. According to the report, a more valuable Naira would help reduce inflation by making imports cheaper in local currency. And in the same vein, data from the central bank shows that there was a decline in reserves from $39.7 billion in January 31st, 2025 to $38.42 billion on February 28, 2025, reflecting sustained external pressures amidst the recent appreciation of the Naira. Director of Research and Strategy, Chapel Hill, Denham, Mr. Tajuddin Ibrahim, was on our flagship show, Business Nigeria. He threw light on the rationale behind the steady depletion of foreign reserves.
It is the step in the right direction, because when you look at the FX reserves and the depletion that we are talking about, it is justifiable for the following reasons. Number one, we have seen a situation where FPIs, that is foreign portfolio investment inflows into the economy, have improved. And that improvement has somewhat emboldened the CBN to supply to the market. And the second way to look at it and consider if it is suitable for the reserves to be utilized to support the Naira or not. The second thing to look at is the exchange rate itself. Exchange rate has been broadly stable, and at some point in this year, it has appreciated, for the currency to trade as low as 1,400 level, which is something that we find interesting, particularly investors in the capital market. So
Latest report shows that Nigeria's oil production surged in February, exceeding its OPEC quota of 1.5 million barrels per day by 70,000 barrels per day, contributing to the cartel's increased output in February. An energy lawyer and analyst, Dr. Ayode Leoni, earlier today also stressed that some policy initiatives introduced by President Bola Tinubu is responsible for this positive trend.
If you had vandalism, you'd have a number of wells shut in. You hear people complain about the terminals or inability from the wellhead to get from the wellhead to the export terminal. But you don't hear all of that anymore. You don't see people write much of that on social media. So it means that something good is happening. Much of that effort is yielding good fruits. Also because they are getting locals involved. You know, the PIA has the trust arrangement, so that when you safeguard those assets too, there's a benefit you derive. So locals are getting involved. It's a change in strategy, which means you understand the creeks, you understand that environment. Come join us and get a benefit when things work. So I think it's positive, and I think it's good news for us. Recall that our budget benchmark is $75 per barrel and 2,060,000 million barrels per day. So we've got our eyes set on those targets, and we need to do everything it takes. So good news. A lot of these actions, these reforms are yielding fruit. I mean, painful reforms, but in the mid to long term, excellent decisions have been taken.
Now, the stock market regained strength on price levels as renewed interest in securities market activities intensified. The trade index jumped by 0.7% from mid-trade to close down, splashing gains on investments for many shareholders. Dangote Sugar and African Prudential Insurance elevated trades with maximum of 10% each. Other gainers included Eternal Oil, Transcorp, and Livestock Feeds. Major shares that traded downwards were VFD Group with nearly 10% loss, Suno Assurance, Omatech, Jais Bank, and Total Energies. And crude oil prices fell today as concerns about the impact of U.S. import tariffs on global economic growth and fuel demand and rising outputs from OPEC plus producers cooled investors' appetite for riskier assets. U.S. West Texas Intermediate crude sells for $67.04 with a decline of 0.03%. Brent experienced an upward price review of 0.04% to sell for $70.39 per barrel. Bonnie Light sells for $78.62 per barrel with a downward review of 2.84%. And for the OPEC basket, dealers offer $71.75 with a decline of 1.03%.